Anyway, just with kind of the batting around back and forth here, that's pretty much why I'm using one contract here. I'm not going to use multiple. So I'm okay with this. I like my take profit set at all-time high, and I like my fine handle stop loss below this fair value gap. So here's when it gets a little bit tricky. A little bit more risk comes into play because NASDAQ actually took the buy side liquidity already. So at that point, that's why you see me, I'm cutting my risk in half by putting it to a 2-handle stop loss. Okay. So I'm not going to move my stop loss any more than I already have. Okay. At that point, that would just be poor risk management and me moving my stop up too tight. Okay. Now, I'm not going to keep this on my chart here, but I just want to draw the box out because this large up close candle here, this is also going to be our classic breaker. So we have a low, high, lower, low, trades above. This right here is our breaker. So we're trading about to the midpoint of that. So as we're trading into this fair value gap, we're also trading into midpoint of this breaker. Now, the only reason why I don't view this fair value gap as a pyramid entry, so a pyramid is basically just adding another contract to my position. The only reason why I'm not doing that is number one, how close NASDAQ is to the highs, and number two, just the overall price action that we've had thus far. Digging deeper into the breaker there, as long as we hold the low of the breaker, I think it's okay. Okay, going for that immediate rebalance here. But notice, like, no matter what the outcome of this trade here is today, just notice the risk to reward here. And if you apply this to almost every single trade, by default, you're going to be making a good amount of money, okay? So, basically, it's 5,004 through 750, the entry, right? And we're going up here. This is about 13 handles, and we're risking 3 handles, right? So almost $1,000 of take profit. We're only risking that for $150. So most of your trades want to look something like that. Okay, not. I'll see a lot of guys' execution videos, and it'll be like, I mean, basically their take profit will be the same amount of length in terms of space as their sell stop. And I'm like, okay, well, I just know right away that they're not profitable because if you're trading like that every time, like you're not edging out any type of losses because your losses and take profits are the same. So all you're doing is climbing an uphill battle just doing that, and you probably have low confidence in your trading model in the first place if you have to trade like that. So partial should have been taken above this high here, like I said, and then you're going to be holding on a runner for all-time high up here. Okay, very simple. We did color outside the lines just a little bit, but I still think that this is clean here. So we reverted not only to this imbalance, but also the midpoint of this breaker. We overshot it a little bit to do what? Trade down to this down close candle right here. So bullish bullish institutional order flow would tell us as soon as it taps down into that, that's accumulating more long positions, and we'd like to see us continue higher in a favorable environment. And I like what I'm seeing here. So, but as I always tell you guys, this isn't me having low confidence that my full take profit will be hit because I think it's a great take profit. However, I'm sitting here with my take profit here. Just because you see me doing that does not mean that's what you have to do. Whatever you feel comfortable with. If there's money on the board and you feel like you should just take it, and I'm wrong and it's not going to go to my take profit, take the money. Make yourself some money. Pay yourself. Okay? If you're newer and you don't understand the power of long-term thinking. So we have a 2-handle stop loss here. See how it's already wicking off aggressively? So that's probably what we did not want to see. Wicking off aggressively, but that does not mean anything just yet. So I'm going to move my stop up more just because I don't think that there is a real need for us to retrace here. And if we do, it's probably just going to consolidate. So I'm going to keep stops tight here. So we now have a 1.5 handle stop loss. So risk is basically, you can just classify that as break even because I don't think that's significant in the slightest. So stop loss at break even, and we're going to let this run here up into all-time high buy side liquidity. Just a little bit more effort here. 5 more handles. Come on, get up there. NASDAQ still continues to rise. The Fed continues to pump their own money into this thing. That's what's going on, guys. It continues. So I'm watching the 1 minute down close candle here on my other screen for NASDAQ, and as long as we hold that, I'm staying in the trade here for ES, okay? I don't see any reason why we shouldn't also breach all-time high here on ES. So we got our we have our stop loss here in profit, and take profit coming in about 10 seconds. Maybe less. There it is. Come to Papa. Alright, so I think, that was about 16 handles. I mean, perfect entry and exit. So, yeah, I don't know what to say. That's exactly what I was looking for. I explained the logic ahead of time. I showed you guys what it looks like to manage a trade properly, not impulsively and not in a fearful scarcity type mindset, okay? This is how you should manage a trade.